We have the CFO joining Kelly Steckelberg, Chief Financial Officer at Zoom. Kelly, great to have you on the program with us this morning. So one of the analysts I thought had a really interesting comment. They said perfection still wasn't enough for the shareholders of your guys' company. So walk me through, just how perfect was it in your mind? How proud are you guys of the numbers?
Oh, good morning. We're very proud. We announced, year-over-year growth for Q3 of 85% and guided for the full year 609 to 610 million, which is 85% for the full year, while also we had free cash flow of $55 million for Q3. So we are super excited, and we're really focused on building a long-term business. And, I think the investors for the long term will understand that's what we're focused on.
Free cash flow, the $55 million you mentioned, is a big increase from the previous two quarters, which were in the 17 and 15 million. So are you going to be able to keep up that improvement rate, though? Walk me through how that became such a big difference quarter over quarter.
Yeah, well, a lot of the beat on the top line flowed all the way through to profitability and cash flow. And there are some other benefits in there for things like ESPP, but for the long term, we are really focused on building a sustainable, profitable business and returning cash to the investors, absolutely.
So when you look at the difference, what was it specifically? Can you give us some details? Because what's interesting here is the revenue growth is slowing, as we know. It's still huge. It's 85% on an annual basis.
Yeah.
A year ago, Zoom was doing over 100, but the idea that the revenue is growing at a slower rate, but the cash flow is now increasing, I think is what people want to see. So tell me how you pull that off.
Yeah, and also I would just like to, say, while yes, revenue is slowing, I think it's largely unprecedented to see these types of growth rates even at this scale.
For sure.
So from a company this size, we're still very proud of our growth rates. And the way that we're focusing on profitability is starting to see, we saw improvements in our gross margins as we continue to scale, but still having a lot of capacity for our, the consumer needs. And also we saw efficiencies in our marketing and sales line as well. And this is, we built a tremendous awareness in the US and sort of shifting some of that investment now to international as we focus on growth in those areas.
And by the way, I'll add to the comment on sales, because according to Bloomberg, relative to your peer group, you're in the 96th percentile of 12-month sales growth. And it's not an easy peer group given the nature of the industry. Now, the other thing here that I think is interesting is about the new clients. Are you able to right now bring on more big new clients and keeping the same sales force, or are you adding people on? Are there expenses that go with that?
Yeah, well, so we are very excited about one of our key growth initiatives is expansion into the upmarket. And you may have seen one of the metrics we announced was the number of customers with greater than 100 million in trailing 12 months revenue. And we had a record number of adds of those in the quarter of 80 new customers in that category. And we are investing in our upmarket sales team, but equally across all of our sales organization as well. So you're not going to see a spike, for example, in our sales expenses just to continue, attracting customers in that segment.
Who are you competing most with? What competitor keeps you up? Is it just Microsoft and Skype? Just want to make sure we got you here, Kelly. Yeah, there you go. So I'm just curious, in terms of your competition, who's your biggest competitor right now when it goes to getting new clients? Is it just Microsoft?
Typically, when we're going in, especially in the upmarket, the incumbents that we're seeing in that space are, some version of the Cisco WebEx suite of products is typically who we're seeing.
So right now, are you driving customers into your product from the competition, or are these new customers smaller businesses that say don't have an existing suite of products?
Yeah, what's really exciting about that is it's both. So in the enterprise and upmarket customers, there's typically someone in there, but we see new uses for Zoom and video communications every single day. And we see, early adopters, as well as especially as we're pushing more and more into international, we see lots of greenfield opportunities in those markets.
When you raise the revenue expectations, you see the cash flow improvement. Obviously, the question continues to come back onto the earnings side. You came ahead of the estimates. You also bumped the EPS look going forward, too. Is that a priority, staying, obviously, cash positive and staying profitable? There's a lot of other companies in your space right now that are trying to turn profitability. Is that an important distinction?
It really is. So first and foremost, we are focused on driving top line growth and continuing to take market share. But we do that in a very thoughtful manner. We look at every dollar that we spend and ensure that the ROI is there. And that's across all elements of our business, whether it's R&D, sales, and marketing. But we certainly are focused on providing growth, but being profitable and delivering cash flow at the same time. Absolutely.
Is there enough with the additional cash flow that you've got? Cash and equivalents I see is about being over $200 million. Is that a good amount for you guys to do what you need to do in terms of hiring, in terms of expansion? Is there any thought about using the stock at all post-IPO? Is there any thought about generating revenue or cash elsewhere?
Well, when you look across all of our short-term and long-term cash and cash equivalents, we have over $800 million of cash sitting on our balance sheet. So we certainly think that is sufficient for at least the foreseeable future in terms of hiring, marketing investments, data center investments, anything we might need to run the business for the next few years.